Welcome to SBI Securities Daily Market Podcast, where we will be discussing important levels on Nifty, Bank Nifty, USD INR, along with the positioning of FIIs with respect to the open interest data. Now, yesterday we saw index continuing its positive momentum throughout the entire session, leading the Nifty to close with 1% gains and the first close about 20,000 levels. So, along with Nifty, even Bank Nifty has ended the session with 1% gains and continued to outperform for the third consecutive day. The key to approach such markets which are at all-time highs or near to all-time highs is not to find resistances but to mark important support levels, use the dips towards those supports and then ride the trend on the upside. In the last few podcasts, we have been emphasizing that Nifty could continue its outperformance compared to S&P 500, as can be seen on the ratio charts of Nifty and S&P 500. And we still feel that for the next few sessions, this outperformance could continue, and more so because large caps have now started to participate in the ongoing rally. Coming to Nifty, post marking fresh lifetime highs and closing near to 20,000 yesterday, important support zone now lies at 19,850, 19,870 zone, and till this zone holds, we could see the momentum continuing on the upside up to 20,200, 20,250. If we see the weekly option chain, highest put writers are now placed at 19,900 and 19,800 strikes, as well as there has been a lot of short covering in at the money calls, that is 19,800, 19,900 calls. So this implies that the support zone of 19,850, 19,870 could act as a very important level going forward on the downside, and the call writers are placed at 20,000 and 20,100 strikes, which implies that 20,200, 20,250 could act as a near-term resistance in the coming few sessions. As we have discussed in the previous weekly podcast as well as the few daily podcasts, along with IT moving, banking had to show strength. Now banking started showing strength in the last three sessions, and now it was the turn of Reliance, which has crossed its important hurdle at 2460 levels, which was its 20-day exponential moving average. And crossing these important support levels, important resistance levels, I feel that the stock is expected to show positive momentum on the upside, and now this could be an important trigger for Nifty moving ahead from here on. So overall trend looks bullish positionally. The trend decider level on the downside now would be 19,800, 19,850, and all longs can be held with this as a trailing stop loss. Coming to Bank Nifty, Bank Nifty has managed to close at a 6-week high at 45,550, post outperforming in the last three sessions, and with this it has broken few important resistances on the upside. So we feel that going forward now 45,200, 45,250 will act as an important support, while with put writing witnessed in 45,500 and 45,300 strikes. Until this zone holds, upside up to 45,950, 46,200 can be witnessed. Now significant call writing is witnessed in 45,800, 45,500 strikes. So we feel that the first resistance could be around 46,000, followed by 46,200. But in these kind of markets which are just moving up and up, and with Bank Nifty just started to outperform in the last 3 days, we feel that these resistance may move up and the supports also eventually would climb on the upside. Stock specific within the banking names, we saw Axis Bank registering its fresh all-time high yesterday, ICICI Bank breaking out of a consolidation above 975 levels, and even we saw some strength in HDFC Bank throughout the last 3-4 sessions, and now the stock has managed to cross its 200 DMA. So all these three stocks are ready to move on the upside. The only missing or the weak link is Kotak Bank, which is still facing a critical resistance at 1830 levels, where the 200 DMA is placed. So this momentum in Kotak Bank is now very much important from the Bank Nifty's perspective. Friends, it's important for us to understand what the FIIs have done yesterday, and that will act as an important cue to gauge the market trend from here on. So FIIs have been net buyers in cash segment to the tune of 1,473 crores, while DIIs have been net buyers to the tune of 366 crores. If we closely look at the open interest data of market participants, FII's long-short ratio for index futures has tremendously improved to 60% compared to 50% at the beginning of the expiry and 40-45% in the last expiry in August month. So this is a good data. And just digging a bit into the data, FIIs in index futures have been net buyers to the tune of 8,500 crores. In stock futures, they have been net buyers to the tune of almost 7,000 crores. While they've sold options worth 2,230 crores, they have sold puts to the tune of 28,500 crores. So it is almost 12 times the amount of puts sold compared to the amount of index calls sold. So this, in all probabilities, is a positive data, and we feel that these data points would lead to eventually Nifty moving higher, and even at lower levels, the support will be there at for Nifty around 19,800 and 19,900 zone. Now let's discuss where there can be some interesting stock specific and sector specific opportunities. Throughout the last week, we have been bullish on railways, defense, PSU stocks, IT, whether it is large caps, especially HCL Tech, TCS, Power, and CPSE names. Now, all these stocks within these sectors have given excellent moves and momentum even yesterday and throughout the previous entire week. So, we feel that the momentum in these names, especially Power, PSU banks, now add to that large cap banks also. We've just discussed a while back. Even insurance companies like ICICI Lombard, ICICI Pru, HDFC Life, auto names like Maruti, M&M, Hero Motors, oil and gas, specifically Reliance, from the cement names Grasim and Ultratech Cement, as well as Dalmia Bharat, capital goods. One side we are seeing the sector moving, especially L&T, Siemens, ABB. So all these names would be in momentum, and mind it, all are good quality stocks that are moving. So this rally, if we see overall from an overall perspective, the rally is being led by good quality stocks and not by junk stocks only. Even names from the consumption and real estate space are showing some positive traction and are looking bullish. So we feel along with Nifty, it will benefit to be in stock specific pockets and in good quality names, and especially with the macros right now just going a bit against us, with Brent crude prices inching above $90 a barrel, dollar index sustaining above 104.50. So we must essentially look to reduce the over leverage in mid cap space, where there is an excessive run up, where a lot of stocks have moved 3x, 4x, 5x, and we should shift a part of that capital to the large cap space, as the margin of safety is higher in large caps, and especially with the momentum now returning back to the large caps. Coming to USD INR, we expect the pair today to trade in 82.85 and 83.35 range, with immediate supports at 82.85 and 82.90 levels. On the upside, the first resistance would be at 83.20, and beyond 83.20 we expect the pair to move towards 83.35. So that's all for today's episode of SBI Securities Daily Market Dose. We hope you enjoyed listening to our podcast and are finding it useful for your trading decisions. Do tune in tomorrow for more market related updates and insights. Until then, happy trading, stay safe, and thank you all for listening to this podcast.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.